Hello and welcome to Moneylife. This is Sucheta Dalal. This week we're going to talk about what is making news, which is a decade too late. The Anil Ambani Group is finally facing the heat of investigative agencies. Hasn't happened in 10 years, and you wonder why. In fact, it's a decade of studious indifference to financial recklessness, defaults, allegations of financial jugglery, but Anil Ambani just seemed to soar all about it until a week ago. The Enforcement Directorate now has him in its crosshairs. In fact, early August, or rather yesterday, saw the Enforcement Directorate summon Anil Ambani himself for an 8-hour grilling, as they called it in the media. His top officials, Amitabh Jhunjhunwala and Satish Seth, have also been summoned in apparently a money laundering investigation linked to a 17,000 crore bank loan fraud involving Reliance Communications, which I'm going to call RCOM, Reliance Commercial Finance, and Reliance Home Finance Limited, the last being rather notorious. Those of you who read Moneylife would have read about this. Here's a link to an article in case you want to look at details about what happened there. But until the end of July, far from anticipating trouble, Anil Ambani was on the way to making a dramatic comeback. In fact, the share prices of his only two viable, profitable companies, Reliance Infrastructure and Reliance Power, were soaring. And he had activated a 2017 tie-up. Yeah, it was 2017 with Dassault Aviation, but they suddenly announced that the two companies were now going to make luxury business jets, the Falcon 2000. He was also set to bag a lot of important defense deals. And sure enough, friendly media these days is so happy to tout this as a big turnaround, influence share prices, and say that he was back in the race with his brother Mukesh. Affable. But clearly, the ED action couldn't have happened just like that. There has to be a trigger. The question was, what was it that triggered this serious investigation? Everyone's talking about it. Everyone has their theories. I have mine. I believe that the turning point was the explosive podcast interview by industrialist Vijay Mallya, who accused Indian agencies, that's investigation agencies, of targeting him, even though the government had recovered 14,000 crore from him, which is significantly more than the 9,000 crore that he owed banks. And remember, this is with interest. In fact, it's the only known case where enough and more has been fully recovered. Now, Mr. Mallya, Nirav Modi, and a few others had faced the full wrath of the state after the bankruptcy bill came into existence, even though the default by the Anil Ambani Group was far, far bigger in comparison. But Anil Ambani, high profile, Ambani surname, politically connected, was left untouched. No threat of any arrest or any action. And in fact, on the comeback path, doing defense deals. Doesn't matter the kind of losses totted up by his companies. This seems to have changed after the podcast received a hugely sympathetic response from the people of India. And remember, the government is very sensitive to public opinion when it's that large scale. Now let's talk about the Anil Ambani Group's liabilities. This is called Anil Dhirubhai Ambani Group, which is ADAG, had liabilities exceeding 1 lakh crore at one point of time. It was a slow-moving disaster, yet every regulator looked away. This includes the Reserve Bank of India, the Securities Exchange Board of India, statutory auditors, and of course, all the investigative agencies and tax officials. There was barely any scrutiny or enforcement action, even though there were plenty of red flags. Shell companies, missing funds, failed initial public offerings, unpaid investors, trying to use all kinds of loopholes, and then finally, a series of defaults. Start with the shell companies. In 2019, Moneylife published an exposé showing over 122 ADAG firms were operating out of a single address at Santa Cruz in Bombay. They had common email IDs, same directors, and absolutely no meaningful business activity. There were 122 shell companies, and shell companies are not set up unless they're going to be put to some use. It should have triggered action. It didn't. Even when Anil Ambani famously told a UK court in 2020, 5 years ago, that his net worth was zero, that he was bankrupt, that he had sold jewelry to repay debt, the Indian state did not even blink. It was business as usual, as though it didn't happen. That was a case filed not by Indian banks, Chinese banks, to whom he owed over 900 million through RCOM, and there were some personal guarantees involved. Want to read about that? We have written it. Here's a link. So, was he too big to nail? Anil Ambani, for those who don't know the background, because it's history now, inherited a huge business empire spanning telecom, power, media, finance, infrastructure, and defense equipment after an acrimonious split, really nasty split, which is a matter of several books, with his brother Mukesh Ambani in 2005, 20 years ago. So many investors were probably 5 year old at that time. In January 2008, Reliance Power, which was now under him, raised 11,700 crore through what was until then India's biggest, also most controversial IPO, which opened to a disastrous listing. That has been the story of the ADAG group afterwards. The group, which was once valued at a spectacular 1.7 lakh crore, has been unraveling in plain sight for over a decade. It's not as though it couldn't have been stopped, that people didn't know it's happening. They just studiously looked away with very little discussion or analysis, even in the media. Why? Because of Anil Ambani's propensity to file defamation suits to counter any criticism. He filed defamation suits against members of parliament and top lawyers. Obviously, nobody wanted to spend that much of time doing it. All that has changed very decisively in July 2025 after the ED conducted raids at 35 locations. The enforcement agency alleged, apart from that 17,000 crore, that 3,000 crore had been routed through shell companies between 2017 and 19. Bribes were paid to Yes Bank officials to get loans. Now, they have asked for officials of State Bank, ICICI Bank, Axis Bank, HDFC, UCO Bank, Punjab and Sindh Bank to be questioned, and one person has also been arrested. Yet, all this activity, and just a week before that, Canara Bank had suddenly woken up to decide that the RCOM account was a fraud. Anil Ambani, as usual, took them to court, and Canara Bank did a reversal. When we thought this is the usual story, the very next week, State Bank of India went ahead and again declared the RCOM account a fraud. Nothing has happened this time because lots can change in 1 week. And SBI was perhaps aware that the ED was going to question the due diligence of banks in granting these loans in the first place. So let's look at this group and take a rundown of the implosions at ADAG and what remains. So RCOM, one of the biggest, in fact, at one time India's second largest telecom company, it filed for insolvency. It had claims of 47,251 crore by its creditors. And what has been sold? One subsidiary, RCIL, acquired by a Mukesh Ambani entity for 456 crore. So out of this big operation, 1% has been recovered. Now the two banks have called it a fraud account. There's likely to be a probe by the Central Bureau of Investigation if this investigation momentum continues. Then there is Reliance Home Finance. It collapsed within 18 months after a very questionable backdoor listing that SEBI again looked away and allowed when it should have questioned it. In fact, nothing was questioned until 2024. So SEBI didn't do anything during the listing, which was done through a convoluted demerger, which has been explained in Moneylife by our columnist, Mr. Ranganathan. There's a link. I'm not going to get into that just now because that's not an issue. SEBI's investigation in 2024 was again something that should have been a big turning point, not until last week. But SEBI said that Anil Ambani and 24 group executives will be barred from the market for 5 years, and the group was fined 624 crore for diversion of funds. This information was apparently shared with the ED and has led to action now. In fact, Mr. Ranganathan in his column says that Reliance Home Finance masqueraded as a mortgage lender when it was actually operating like a Ponzi scheme, and money was going to all kinds of group companies. ADAG, as always, has challenged the SEBI order that continues at one level, but insolvency proceedings were initiated, so that takes a bit of a halt. And again, remember, nothing has happened. At one point of time, Autumn Investments, a new insolvency petition was admitted in 2025, leaving it all unresolved as yet. Now we come to Reliance Capital. In November 2021, the Reserve Bank of India finally superseded the RCL board after years of inaction, or rather glacial inaction, as Mr. Ranganathan says. By then, Reliance Capital's outside liabilities were a massive 76,000 crore, and it had a negative net worth of 15,912 crore. Want to read more? There's a link. Despite having these valuable assets, like two insurance companies, Reliance General Insurance and Nippon Reliance Life Insurance, a securities company, this company, or rather conglomerate of companies, just unraveled because banks seemed complicit in allowing unchecked pilferage even while losses mounted. In fact, NFRA, the National Financial Reporting Authority, which is the regulator for statutory auditors, has penalized the auditors of Reliance Capital. But what about RBI, SEBI, Ministry of Corporate Affairs, debenture trustees, all with fiduciary responsibilities, which were sleeping at the time when they ought to have acted? They remained unscathed. In 2024, the company was finally acquired by IndusInd International Holdings for just 9,650 crore. This was shamefully below the company's liquidation value of 13,158 crore and its fair value estimated at 16,696 crore. Now there are a series of small companies. Vidarbha Industries Power Limited, it had a 600 megawatt thermal power plant in Nagpur, acquired by Adani Power, sold off for 4,000 crore against an admitted debt of 6,753 crore. Part of the exposures was converted to equity. Remember, we are now talking in thousands of crores, and these are small companies where it's written off. The bigger picture I've already painted, where the losses are in tens of thousands of crores or remain unresolved. Then there's Reliance Broadcast Network, again, small but high profile company, which was acquired by Sapphire Media for 261 crore in February 2023. Its admitted debt also was 1,000 crore and nearly 686 crore was written off. There's a company called Reliance Naval Engineering, had other subsidiaries, admitted to insolvency in Jan 2020, acquired by Hazel Mercantile in March 2022 after a settlement of arbitration claims and a payout of 400 crore. Then there's Reliance Infrastructure. This is one of the two viable companies which is flying high before all this action of July. Share price was shooting up. It is into power, engineering, procurement, and construction, which is called the EPC business. It also is financially precarious, has just exited insolvency proceedings, but drastically cut debt to near zero and has had some arbitration wins. But we don't know what's going to happen because concerns about governance as well as finances remain. Reliance Power is another profitable company. It reported a net profit of 3,090 crores in FY 24-25. Again, after drastic debt reduction, it raised funds through a preferential issue. Yes, people subscribed and sold assets, including a 1,200 megawatt hydro project in 2023, a 45 megawatt wind project in 2024. This also has been badly affected by the ED action. Then there are a cluster of small companies: Reliance Media Works, Reliance Defense Technologies, Reliance Aerostructure, the one which is doing the Dassault joint venture. Each in different stages. Some are shell companies, some are activated, some have just announced plans. We don't know where they are headed. But the point is, with all these defaults, such a large amount of loans written off, Mr. Ambani was flying high, getting into defense as though there was no issue until July. What is the future now of the Anil Ambani Group and its many companies? The answer, as usual, depends on whether the government is really serious or these are just headline making investigations that will peter off, there'll be litigation filed, and after decades, you'll have inconclusive results, cannot establish things, documents vanish, we don't know what happens. We have seen it daily, right? Let's not also forget that while the government promises a lot, there is a flurry of action, nothing really happens. Mehul Choksi hasn't come back to India. The Sandesra family is doing extremely well in Nigeria. Jatin Mehta of Suraj Diamonds doing very well in another tax haven, comfortably abroad for over a decade. Only Nirav Modi is in a UK jail because UK rules are different, not because of our doing. So the ADAG collapse is not just about a flamboyant billionaire's downfall. It is a mirror to how India's regulatory ecosystem protects the powerful until a scandal becomes politically untenable. If the investigative heat does not lead to action or extend to bank boards, credit rating firms, trustees, regulators, then it's going to be yet another case study of India's pathetic enforcement. If you agree, do subscribe and share this video and track what's going on with this group and where it's headed. Thank you.